This segment of This Week in Agribusiness is brought to you by Case IH. Be ready with Steiger Quad Track and Magnum Row Track tractors from Case IH.
At the Farm Progress Show, we have the opportunity at the ADM display to talk to Steve Freed with ADM Financial Services to talk about markets this week. And Steve, we just can't get China out of the market picture, can we? Is it as big an impact on commodities as it is on stocks?
I think it is, Orion, simply because, in 2005, China decided to become a export economy. And in the 2008 recession, we stopped buying some of their exports, and globally we grew capacity, whether it was crops or whether it was equipment, clothing, whatever. And now they're changing their economy to more domestic use. And the average Chinese is more of a saver than a spender, and so it's going to take time. Their stock market is overvalued. They're the number one buyer of energy in the world. Now, they have the number one policy is still food security, so I don't think it's going to affect agriculture as much other fields. But every morning when you come in, you look at their stock market, if it's down 4%, commodity prices are down 4% too.
Has it affected their buying up to this point of soybeans in particular?
Two things have changed in that. Number one is there used to be a group of investors that bought soybeans and used it as collateral to get cheaper loans to build apartments and condos and roads to nowhere. And they've pretty much phased that out. They were the ones that bought soybeans front-loaded. I mean, eventually those beans were used, and every year their demand for beans goes higher. They got 450 million hogs compared to our 40 million, and they want to expand that herd every year. But one of the problems is that South America has 12 million more tons of beans this year than a year ago, and the Chinese have 3 million more tons in stock than a year ago. So their buying pace is going to be slower. They'll still take the beans from us, but it's at a slower pace.
Are they a corn market for us that's important?
It's extremely important because they're changing policy. What they're thinking about doing is lowering their support price. And by doing that, it reduces the import demand. So we send them 6 million tons of DDGs every year. That could back up in the United States. And if that does, that competes for soybean meal usage and might make our crush demand a little bit lower. So their corn policy is extremely important. Now down the road, we think that they will be a net buyer of corn as they have water issues or as their people eat more. But today, we're watching their policy very closely as to what they do with their domestic prices.
And they can't afford hunger.
No, I think the only time they've ever had a revolution is when they ran out of food.
So the leadership knows that it can't handle that. We want to talk more about the crop that we're looking at in this country, and we'll do that when we continue with Steve Freed of ADM Financial Services here on This Week in Agribusiness.